Hi everyone, in a recent 2025 Global Wealth Report, the UK economy was unfortunately put under the spotlight because it stated that average wealth per adult in the UK fell by the second largest amount of any major economy in 2024, with only Turkey worse than this. So in this video, we're going to take a closer look at the report and at the health of the UK's economy in 2025 to see if it really is as bad as this. As always, please do like the video and subscribe to the channel so I can continue to offer more content for you in future. If you follow our social media channels on X, Facebook and Instagram, you'll receive daily crypto and financial education news update posts which will keep you informed. Stick around to the end of this video to find out what services CoinKnowledge offers. Just a quick reminder that nothing contained here is financial advice, and let's jump straight in. So let's start with the 2025 Global Wealth Report that was published by UBS and looks at global wealth across various areas. For example, looking at different markets, countries, millionaires, and the evolution of wealth. And let's take a look at what this report says about the UK, because as I've just mentioned, the UK had the second largest decline of average wealth per adult of all major economies in 2024. And hopefully this isn't too small. And you can see the UK here on the right, with just Turkey declining more than this. This meant that the average wealth per adult in the UK fell by 3.6% in 2024, which would equate to a total reduction in the UK's household wealth of about $1.4 trillion, which is the equivalent to over £1.1 trillion. To put this into perspective a bit, Denmark's real average wealth growth per adult was about 13%, putting it in first place, with South Korea a close second and Sweden in third place. And the United States, which is in seventh place, grew above 7% in terms of average wealth per adult. And we can compare this by area also, given I've just mentioned the US, because while UK wealth fell, the report found that wealth in the Americas grew by over 11%, with APAC or APAC here standing for Asia Pacific and EMEA standing for Europe, the Middle East and Africa, which had the lowest growth as a whole. And Michelle Frey, the recently appointed head of UK high net worth at UBS Wealth Management, commented on the reasons for the UK's decline, stating that average real-term wealth per adult in the UK fell in 2024 because living cost pressures and rising interest rates moved faster than either house prices or most financial markets. Naturally, this dented people's ability to build or retain wealth, which is a fairly obvious statement in my opinion, and doesn't really get into why the UK had the second largest decline of all major economies. But anyway, I think it's important to state at this stage that the strengths of different currencies will have had an impact also, with the weakening of the pound against the dollar over time reducing the dollar value of UK assets. And although we've seen a recent weakening dollar against the pound, generally the dollar has strengthened, with £1 being worth over $2.60 back in 1972, by the way, so it's pretty much halved since then. So having seen the UBS report and some detail of this, let's look at the UK in a wider sense in terms of its economic performance, because we've seen underperformance of financial assets as well as economy in the UK, which undermines investor confidence and the ability for households to accumulate savings. Firstly, the London Stock Exchange's FTSE 100 index grew just 5.7% during a period where the S&P 500 in the US grew over 25%. And although the FTSE 100 is up and hit new all-time highs in 2025, including recently, it has obviously not kept pace with the S&P 500, as you can see here with the S&P 500 being in red, with both being close together if you go back a bit further in time. And this underperformance has an impact on UK pension funds, which have steadily reduced their allocation to UK equities to much less than 10% today, with international investment increasing by UK pension funds. Also, as the Bank of England raised interest rates from 0.1% in December 2021 up to 5.25% in August 2023, the market value of existing government bonds held by these pension funds fell, with gilt bonds yields increasing to levels last seen back in 2008, with you being able to see this increase here of the UK 10-year gilt. And if we look at GDP in the UK, which stands for Gross Domestic Product, and is a measure of growth in an economy, well, according to the ONS, which is the Office for National Statistics, monthly real GDP grew by 0.4% in March 2025, but then fell by 0.3% in April 2025, and then by 0.1% in May 2025. So the second month it's contracted. With you being able to see UK GDP since 2007 here, if we zoom out, with the small declines I've just mentioned on the right-hand side. The production and manufacturing sector saw the largest decline of 0.9% in May, followed by the construction sector, which fell by 0.6%, offset ever so slightly by the services sector, which grew by just 0.1%, mainly due to the information and communication sector within this, which increased by 2%. However, there was a large 2.7% fall within this in the wholesale and retail trade sector in May, indicating that consumer spending remains weak. And if we look a bit deeper into productivity in the UK, so the output produced per hour worked here, we can see according to this data from the ONS that productivity has been increasing in the UK, but this has certainly slowed since 2008, with increases in productivity above this largely being due to working increased hours rather than increasing the output per hour. And on an international scale, UK output per hour is estimated to be around 15% lower than countries such as France, Germany, and the United States, with a key reason cited for this being a sustained period of low business investment, which limits the adoption of new technologies. And finally in this section, the IFS, which is the Institute for Fiscal Studies in the UK, put out a report towards the end of March 2025, highlighting a revision by the ONS that stated that the ONS valued private pensions in the UK incorrectly from 2018 to 2020, meaning that the total wealth of households in this time period, given that's what we looked at earlier, but this miscalculation by the ONS ended up being about £2.2 trillion less than they actually reported at the time, which is huge. So we're seeing us not being able to rely on predictions, forecasts, and valuations for the UK as well. But let's now move on and look at UK demographics and wealth, because the figures from the UBS report we saw earlier don't necessarily tell the full story. Within the UK, the ONS provides a detailed breakdown of wealth distribution from 2020 to 2022, which is the latest report, unfortunately. But most people are aware that the median household wealth in the UK is highest in the southeast, actually at a value of £489,800, and lowest in the northeast, with a median household wealth of £179,900, with a median household wealth in the UK last calculated at £293,700. And there are obviously significant generational differences also, because analysis by the IFS showed that median household wealth for those in their early 60s is now 20 times higher than for those in their early 30s, which is a gap that has doubled over the last decade. And you can see another example from the IFS here that shows that 50% of those aged 75 or older were in the bottom 15% of the income distribution in 1968 to 1972. However, only 20% of those over 75 were in the bottom 15% for income in 2015 to 2019, saying I think a lot about inflation, pensions, and assets over time. And if we come outside of the UK, we can see here a list of countries with the most wealth inequality, with the US in 7th place, and with the UK standing in 22nd position, by the way. However, the US and UK, along with Thailand, Malta, and Finland apparently, have increased wealth equality the most over the past 5 years, according to the UBS report. And you can see that again here in the graph we saw earlier, but this time looking at median wealth rather than average wealth, because average wealth can be skewed by a few individuals with very high wealth, such as billionaires, for example, whereas median figures tend to offer more insight in the middle of the scale. And you can still see the inequality of wealth distribution in some countries, such as China and the US. And in the final section of this video, let's talk about millionaires and non-doms, because the government's decision to abolish the non-domiciled tax status that came into effect in April 2025 is significant, because according to the latest HMRC data, the UK's non-dom population paid £9 billion in UK taxes in the tax year ending 2024, which is the last year we have for data currently, with these tax receipts increasing by £107 million from the previous tax year, and with about 3/4 of this being income tax, rather than capital gains or national contributions, which makes sense. And the number of non-doms is decreasing, as you can see here in the red line, despite a small increase from 2021 to 2023. The UK government and the Chancellor, Rachel Reeves, initially stated that they would raise about £12.7 billion over 5 years, with the Office for Budget Responsibility also forecasting that the policy change will raise a net £2.7 billion annually by 2028 to 2029. However, there is a lot of debate about wealth migration, because reports by Henley and Partners, New World Wealth, Adam Smith Institute, and the 2024 UBS Global Wealth Report that you can see here forecast that many millionaires are leaving and will continue to leave the UK, which is a risk to future investment and tax revenue in the UK, but others state that this has just been exaggerated, such as the Tax Justice Network, who say that the number of millionaires expected to leave the UK would represent a very small percentage of the UK's total millionaires. And if we look at the distribution of millionaires around the world, according to the 2025 UBS report, you can see that the UK is in 6th place in terms of having the highest number of millionaires, with it actually being in 3rd place 1 year ago, according to the 2024 report, being above France, Japan, and Germany then. And if you look at the United States, which has the most millionaires by some distance, the report states that on average, more than 1,000 new millionaires were created each day in the US last year, rather than this number reducing as it has in the UK. So to summarise this video, as I know there's been a lot to process, we've looked at reports stating that the UK had the 2nd largest decline of average wealth per adult of all major economies in 2024, the weakening of the pound against the dollar over time, despite a recent strengthening, the FTSE 100 index struggling when compared to the S&P 500, UK pension funds, which have reduced their allocation to UK equities, the market value of gilts decreasing, with bond yields increasing to levels last seen back in 2008, GDP in the UK contracting for 2 months in a row, UK output per hour being lower than some other countries, some UK financial forecasts just not being accurate, significant location and generational wealth differences in the UK, but the UK having one of the best levels of wealth inequality in the world, which is a positive, the number of millionaires though in the UK seemingly declining, as well as the number of non-doms who bring in about £9 billion in taxes. So apologies that this pretty much painted a negative picture, but I thought it was important to share the reports and data with you. And that ends this video, and as always, I'd love to know what you think about what the future holds for the UK and its economy in the comments. Just a reminder that if you're interested in more of a tailored approach to your crypto education, and you think you benefit from having someone look over your shoulder and guide you on your journey, I do offer one-to-one coaching to those who have the desire and the means to educate themselves further. And there are links in the description where you can message me and book in a free video call to see if we'd be a good fit. You can sign up for a free account with Coinly using the link in the description to this video, which is one of the best automated crypto tax platforms out there. If you're looking for more specific crypto tax advice based on your personal circumstances, I've partnered with a leading UK crypto tax company in Myna, which is part of the company Nephos that offers other services such as wealth management, restructuring, offshoring, etc. But I'll leave a link to contact them directly in the description of this video. I've also included a link to Trezor's website in the description for anyone looking for one of the best hardware wallets or cold storage out there in our opinion, with 2 new models in the Trezor Safe 3 and Trezor Safe 5 that I actually did a video on that you can find the link to here and in the description. Linked with that, we're pleased to have partnered with the #1 best-selling crypto seed phrase storage firm called CryptoTag. I've included a link to their official website in the description of this video for anyone looking to protect their seed phrase, which is vital. If you're based in the US and are looking for specific crypto tax advice based on your personal circumstances, I've partnered with a leading US crypto tax company in Crypto Tax Audit, and I'll leave a link to contact them directly in the description of this video as well. And finally, If you're looking for a portfolio tracker for your crypto portfolio, then I've included a link to CoinStats in the description of this video, which is the leading crypto and Bitcoin tracker on the market. And if you found this content interesting, please do like the video and subscribe to the channel, as it really does help. And have a great day.